Welcome to the Bitcoin for Corporations show. My name is Pierre Rochard. I'm here joined with Matt Cole from Strive. Welcome, Matt. Welcome to the show.
Thanks, Pierre.
And we're recording this live at the Bitcoin conference in Las Vegas 2025. This is quite the event. It is the biggest Bitcoin event I've ever been to. What do you think, Matt?
Yeah, I mean, last year in Nashville, it was massive. This year, it took it up even another notch. And I mean, the energy here is off the charts. Just couldn't be more bullish about the future.
So tell us, there's been a lot of great news coming from Strive. The approach of doing a reverse merger to enter into as a Bitcoin Treasury company into the public markets. Really curious to hear about that. And then I heard you speak earlier about alpha strategies versus beta strategies. So I think it'd be really interesting for the audience to understand what differentiates those two different approaches to the world of Bitcoin finance.
Yeah, absolutely. I think just to start in saying Bitcoin Treasury corporations at large, less than 1% of publicly traded companies have Bitcoin on their balance sheet right now. And so I think that's why things like Bitcoin for Corporations, this podcast, are so important, that we are so early. And I think sometimes people will say, oh, well, Strive, now there's another one. There's still less than 1% of companies. And most companies should have Bitcoin on their balance sheet and decide how far that they want to go in. For us, we're going all in, right? And strategy has gone all in. You've obviously seen a handful of companies that have gone in. Nakamoto's going all in, and Metaplanet doing amazing things. And when we went all in, we said, okay, we're all in on a Bitcoin treasury strategy. The beta strategies that have been deployed to date, which beta strategies, what we mean by that are just leverage strategies that actually are designed to outperform Bitcoin over the long run, to accrue value to common equity shareholders, increase Bitcoin per share. Those things are amazing, as you know. But for Strive, we're an asset manager. And my background is actually driving alpha strategies. That's what I used to do. I did it for 16 years in fixed income space. Our co-founder, Vivek, he actually drove alpha strategies. He used to run a hedge fund in the biotech industry. So we said, okay, we actually have some differentiation that's unique to us to actually expand how you can even think about a Bitcoin treasury company. And so, we started with intentionally doing a reverse merger, and other company like Nakamoto was doing that as well. There's a lot of advantages to doing a reverse merger than doing something like a SPAC. Namely that if you do it well, one, you actually have access to your shelf on day one. So you can do equity issuances, fixed income issuances. You don't have to wait a year. Which is SPAC, you have to wait a year. So that was something that was distinctive. Prior to the alpha strategy, we also laid out the first 351 exchange, where we actually can allow Bitcoin holders that are accredited to give us Bitcoin, we can give them back shares in a tax-free exchange. So it's actually a win-win, because there's actually a liquidity trap for people that have been in Bitcoin. And as we know, Bitcoin goes up and to the right all the time, right? We're sitting at $100,000, and I don't want to pay the government if I don't have to for legal reason. And if I can get a legal way to exchange some of my Bitcoin for a share of a Bitcoin treasury company, I think that's an awesome opportunity. So we're bringing that innovation. But then this week we had a couple new major announcements. So the first was we raised $750 million in a pipe, and then also have warrants that could bring in an additional $750 million. And so, if you're looking to actually be a major player in the Bitcoin treasury space, you got to get to $1 billion, because when you get to $1 billion of size, that actually starts the flywheel of the volatility effect that Saylor's able to drive, the options markets, and the ability to do convertible notes on good terms. And I think, right now, my assessment of the space is it is very hard to break a company like Strategy. Most people in traditional media don't even understand it. They just see the leverage. They get afraid. They don't understand Bitcoin, let alone a Bitcoin treasury company. And it's just, oh, this whole thing's going to blow up. That's not where we are in this space today. And I think in any new space, as new companies come in, my guess will be that people will over-lever. That's just I think how freedom and capital markets work and greed works. But that's not where we are with Bitcoin treasury companies today. So we will use those leverage strategies. But then on the alpha side, we laid out just 3 strategies. So you can think about a multi-strat hedge fund, and there's hundreds of these hedge funds, and they outperform every year. We found a couple strategies that were very proprietary to us, leveraging our expertise in the biotech industry, where there's literally $30 billion of trapped cash in the biotech industry, companies that have had a negative clinical trial, but yet they're really well capitalized, actually. They have typically $100 million, $200 million of cash, but not really a future. And so there's a win-win there where we can actually merge them into our company and then buy cash basically at a 10 to 15% discount, buy Bitcoin, discounted Bitcoin, right? That's not a leverage strategy. That's just a creative way to get capital, right? Bitcoin claims, another one. These Mt. Gox claims, why do they trade at a discount? It's not because of the risk on the legal side. It's actually because of the duration risk, that they're less liquid than Bitcoin, right? Bitcoin trades 24/7, so that liquidity risk causes them to trade at a 20 to 30% discount. So, again, for a company that has permanent capital, we're not an ETF. We are a Bitcoin Treasury company. We're going to be well capitalized with permanent capital. We can use some of our portfolio, take some liquidity risk because we know we don't need to sell our Bitcoin, right? And buy Bitcoin claims at a discount, and then it kind of builds from there. But adding those on top of a levered Bitcoin strategy, and I think when you think about valuation of companies that can drive alpha, then I think the way to think about valuing them is it should be the MNAV from the leverage plus the alpha strategy.
Wish you could access cash without selling your Bitcoin? Ledn is the global leader in Bitcoin-backed lending. They've issued over $9 billion in loans since 2018 and never lost a single Satoshi of client assets. A Ledn loan is different. With custodied loans, collateral is not lent out to generate interest. No credit checks, funds in under 12 hours, with proof of reserves reports published every 6 months. Ledn gives Bitcoin holders a secure and transparent way to unlock liquidity without selling. Learn more at ledn.io.
Yeah, that makes a lot of sense. I think that when we think about the biotech example, of that alpha strategy reminds me in Bitcoin mining of finding wasted energy, stranded energy.
Yes.
Here you're finding stranded capital and putting it to a higher and greater use that then creates that flywheel of increasing shareholder value.
Yeah, absolutely. And this is how innovation happens, right? You find an inefficiency in the market that is distinct to you. And if you're an energy expert and you can find stranded energy, and I mean, we were talking about this before we got on stage here, is that you think about, environmental risk, and I was kind of making the case that, before Strive used to push back, and we still do when there is ESG overreach that constrains capital markets, right? Bitcoin should be, from a first principles perspective, the most pro ESG asset in the history of any asset, right? Obviously, we know about the scarcity and the bullish rates, but just from that, and you look at the E, well, how much energy that was wasted, gas that was just flared as emissions has now been captured to mine Bitcoin. I mean, that is amazing innovation, right? And moving beyond the skull, look at the bad energy, right? Like no, it's accretive.
Yeah. And then on the other part of it, of the claims and those at a discount, it reminds me of time arbitrage, right? Mm-hmm. Where a corporation just has a longer time horizon if they're treating this as permanent capital than an individual who has their financial planning needs. And I think that it also reflects the fact that, look, Bitcoin's designed to last forever. And normally a corporation is designed to last forever as well. It's just a going concern, as we say. Mm-hmm. Whereas us as individuals, we have a lifespan, right? And I think that it's almost an argument that Bitcoin is more appropriate for corporations than for individuals if you look at it through that lens of what's the time horizon on it.
Yeah, I mean, Bitcoin is, obviously extremely appropriate for the individual to give freedom to the individual. Yeah. And then for a corporation, it's different, right? Because a corporation isn't necessarily looking for an opt-out to be able to go to any country. What they're looking for is assets that actually maximize value to their shareholders over the long run. And that's where things like claims, where you're actually getting Bitcoin in the future, but you're giving liquidity to someone. And you think about some of these Mt. Gox holders, these guys have been put through hell for years, right? Now I guess in a sense, they've been forced to hold Bitcoin as it's risen to $100,000. So that's probably a win, but you can actually give them liquidity. We can take the liquidity. It's not even liquidity risk, but we just take illiquid assets to time, right? And what's interesting is that, if you think of pensions, so my background being into pension, the number one source of alpha for pensions is actually the fact that they're a long-run investor. Yeah. And so they'll take liquidity risk to actually drive alpha. It's not, sometimes people think of these things as super complex. Liquidity risk isn't complex, it's just taking advantage. And I was talking to someone else that, used to work at the Harvard endowment, and some of the tax structures that give them long-run alpha, right? Everybody has to look internal to themselves, a corporation. If you do hard enough, you can probably find a distinct advantage that you have to drive alpha for your shareholders.
That makes a lot of sense. Now, you mentioned that Strive has a strong track record of pushing back against ESG, where it was destroying value instead of creating value. And so do you also see Strive's role in the industry of advancing Bitcoin adoption at other corporations through similar forms of activism?
Absolutely. So core to our mission is financial freedom, true financial freedom. And so part of that was pushing back against ESG constraints towards unapologetic capitalism, meritocracy, that your role as a fiduciary is to maximize long-run value. Well, how do you maximize long-run value? You better have Bitcoin on your balance sheet, right? If you're sitting there on a stockpile of cash that's losing purchasing power, and we go in depth on this, I know you go in depth on this too, and inflation actually hides how much the value of a dollar is being eroded, right? Because what's going up the most is actually financial assets. And you see this for the individuals, and especially individuals that don't own Bitcoin. And it's really hard to afford a home. It's really hard to afford having kids. One of the things that's really refreshing to me at the Bitcoin conference is how many people I meet that have kids, that have flourishing lives, that I'm a Christian, that are people of faith, right? That this community has optimism because they found a great asset, right, that gives the power back to the individual. Well, the same thing can happen to corporations. And I think corporations are screwed when you look at actually AI innovation, the cash that they hold, and I think the opt-out is actually putting Bitcoin on the balance sheet.
All right. Well, thanks for joining us on the Bitcoin for Corporations show, Matt. We'll have you on for a longer period in the future.
Absolutely. Thanks, Pierre.